Do this now! The biggest short bank in the world is TD Bank. Why Toronto Dominion Bank is the most heavily shorted bank in an impending widespread crisis. No one could have seen this coming. Is it too big to fail? Really? The second largest bank in Canada. One of the most trusted and tamed Canadian big bank. Recently are making risky moves in the market. Huge declines in loan values are widespread among 435 U.S. banks, with total $299 billion of unrealized losses. BlackRock is hired to sell over $100 billion of failed bank securities. Meanwhile, just when you think inflation is dead, they tighten the oil market and bid inflation back up as oil is 8% up last week. Gold up 11%, silver up 24% last month, and dollar down 3%, exacerbating the crisis situation. Semiconductor don't bottom before the recession begins. And Samsung's profit just fell 96% to the lowest since the 2008 financial crisis. Why Toronto Dominion is the most heavily shorted bank in an impending crisis. What are the risky moves that TD Bank is making that put a $3.7 billion target on their back? What you could do if you bank with TD Bank today. I will explain it all right after this.
How you like that?
Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here. And you know what to do, and push my button, the like button, if you like what you see in today's video, because I can't push it from this side. This video is brought to you by my Patreon. If you're a good boy, go to patreon.com/magicalgoddesscheryl to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get into the bookstore. You want it to be real. You want it to be true. You want to be my client, don't you? And here's my client's collaboration book. It's already yours. Adversity Equals Success. Such an amazing book with such incredible authors. Order your copy today. And my book, Believe You Are Worthy. Believe you are worthy. Turns out, the biggest short in the banking industry anywhere in the world isn't in Switzerland or Silicon Valley, but rather in the relatively tame financial center of Canada. In recent weeks, short sellers have upped their bearish bets against Toronto Dominion Bank, and now have roughly US $3.7 billion on the line shorting Canada's second largest lender. According to an analyst by S3 Partners, that's the most among financial institutions and puts TD ahead of the likes of France's BNP, Paribas SA, and Bank of America Corp. Part of it has to do with the general skittishness toward the banking sector. After 3 U.S. regional banks failed, and Credit Suisse was forced into a shotgun wedding with UBS Group AG. And there are few signs Canadian lenders have any of the liquidity issues that investors have zeroed in on recently. But analysts also point to worries about TD's exposure to the country's housing slowdown, as well as its ties to the U.S. market through its stake in Charles Schwab Corp. and a planned regional bank acquisition. Short sellers have been actively shorting into a declining banking sector. TD didn't immediately respond to requests for comment from Bloomberg. TD's position atop the list of biggest bank shorts comes as it seeks to close a $13.4 billion deal for U.S. regional bank First Horizon Corp., which would expand its foothold in the United States. TD is widely expected to renegotiate the deal after the recent bout of turmoil among U.S. regional banks drove share prices lower in March. As a result, traders are playing with short interest for TD more than normally because the bank has become a merger arbitration play. According to Rohinton, a portfolio manager. Housing bubble. Rohinton says some short sellers have zeroed in on TD because of its roughly 10% stake in Charles Schwab, which recently lost $47 billion in market value as it came under scrutiny over its unrealized bond losses, as well as TD's position in Canada's housing market, where variable rate mortgages are common and consumer insolvencies are on the rise. TD sits uniquely in the middle of two broad headwinds. The fears around Canadian housing will be projected onto TD. So far, the TD short has been a winner. In March, shares of TD tumbled 11%, which was the biggest decline in the S&P TSX Banks Index. The decline wiped out 18.1 billion Canadian dollars from the bank's market value. Nearly every publicly traded bank in the United States is sitting on loans that have declined in value since they were made. The culprit is rising interest rates, which also slashed the value of banks' other big assets, their holdings of securities. California-based First Republic's balance sheet showed $166.1 billion of loans as of December 31st at amortized cost. A footnote said their fair market value was $143.9 billion. The $22.2 billion difference was greater than First Republic's $17.4 billion of total equity, or assets minus liabilities. The bank was seen by investors as risky because most of its loans at year-end were home mortgages with fixed rates or with hybrid rates, meaning their low rates would stay fixed for 1 to 10 years. About 68% of its deposits were uninsured at year-end, meaning they exceeded Federal Deposit Insurance Corp limits, which created greater flight risk. In that respect, it was similar to Silicon Valley Bank. First Republic bought itself time last month after a group of 11 banks led by JP Morgan Chase deposited $30 billion to halt the run, while the deposits helped liquidity. They didn't boost First Republic's capital. A First Republic spokesman declined to comment. While First Republic is an extreme example, it isn't alone. Among 435 publicly traded U.S. banks listed on major exchanges, 97% of them reported that their loans' market value was less than their balance sheet amount as of December 31st. Combined, they had $242 billion of unrealized losses on their loans, defined as the difference between the loans' fair values and carrying amounts. A year earlier, the same bank said their loans' fair value exceeded their carrying amount by $96 billion. The same group showed $299 billion of unrealized losses on held to maturity securities as of December 31st. Those losses aren't included on companies' balance sheets. The unrealized losses on loans and securities likely fell at many banks in recent weeks as Treasury yields declined. The lower yields signal that investors think the economy is slowing. If they are right, then borrowers could start to fall behind on their loans, adding to losses on bank balance sheets. Banks reporting large fair value discounts on their loans could face earnings or liquidity pressure. They could face pressure to pay higher rates for deposits and other funding sources, while yields on fixed rate loans they own to stay low. If liquidity issues arise for these banks, they may need either to issue additional debt capital at higher interest rates or to sell these loans to become more liquid. If you bank with TD, the most shorted bank in the world, congratulations! You could protect your deposit by transfer your extra savings that is not covered by CDIC, which is only $100,000 in Canada, to another type of account like TFSA or RRSP. For example, if you have $1 million in your savings account, you should redistribute that $1 million into 10 different bank accounts with special purpose with less than $100,000 in it. Or you could open more accounts in Royal Bank or BMO. Keep in mind mutual funds, stocks, bonds, ETFs are not covered by CDIC. But what's in your brokerage account can't be lent out. So the cash, stocks, and bonds are always there. I know it's such a chore, but it's your money and your responsibility. You are such a good boy for watching my video right till the end. Bye.